All right, so as I mentioned, we're using essentially the cash method of accounting for tax purposes. Taxpayers are going to report income in the year that they receive or constructively receive the income. All right, so this is another definition here, constructive receipt. The income is available or in the control of the taxpayer, whether the taxpayer chooses to use it or not. So, an example, December 30th, and you receive a payment from a client. They write you a check, you get it in the mail. You don't deposit it until January 3rd. You don't deposit it in the bank. But you had constructive receipt of that money on December 30th. So it would be in that year that you record the income, not the following year, because you had control over it at that point. Okay? So interest credited to a taxpayer's savings account on December 31st is income in the year that it is credited, not in the year that it is withdrawn. Income also can be realized in any form: money, property, or services. You can barter and it's considered income, taxable income. Cash basis taxpayers do not have to actually receive cash before they record income, but this is different from accrual basis because you are economically better off at that moment. If you, let's just say that I prepared a tax return for Amber, and in exchange, so I prepared a tax return in December. In exchange, Amber says that she's going to, let's see, what kind of business do you have, Amber?
House cleaning.
House cleaning, okay. So she's gonna provide me with an equivalent value of house cleaning services in the month of January. I will be economically better off and in constructive receipt in January for that payment of the house cleaning services. But it wasn't cash, it was services. Still counts though as taxable income. Let's see. Receipt of property or services triggers that income recognition. Taxpayers will recognize income even if they receive it indirectly. So, lawyer agrees to give legal advice to a neighbor in exchange for the neighbor agreeing to paint the lawyer's house. Both parties will have income equal to the fair market value of the services received by them. So whatever the value she's going to have, if she's got a house cleaning business, she's actually in constructive receipt of income that when I give her that tax return, and it's going to be, the amount is going to be whatever the value is of that tax return. So say I charged $500 for it, she's going to report $500 of income on her tax return that prior year, whereas I'm going to report, let's say the value of her housekeeping service is actually $600. I'm going to report that on my tax return the following year when I actually receive those services. So it's whatever the value is of the item that you have received, okay? Federica owns an unincorporated cash basis architectural firm. She performs architectural services for a client during December 2022. She completed the work in 2022. The income was earned, but she didn't receive payment by the end of the year. She got payment January 23rd. In 2023, so she's going to recognize her income in 2023 because that's when she actually got paid for it. This one's a little bit more confusing. We've got a triangle going here. Antonio provided golf lessons worth $300 to Arturo in December 2022. Antonio owed Millie $300. So we've got Antonio with the golf lessons to Arturo. I just need to draw a picture on this one. Arturo, golf lessons, $300. Oh, I'm sorry, Antonio. To Arturo. Antonio owed Millie $300. So he owes Millie. He asked Arturo to pay the $300 to Millie. So instead of giving the $300 to Antonio for the golf lessons, so ordinarily Millie wouldn't be involved, right? Antonio would give golf lessons to Arturo, Arturo would pay Antonio $300. However, Antonio said, no, I owe Millie $300. Just give that $300 to Millie. Don't give it to me, and then my debt is paid to her, and you've paid me off. Well, Antonio's still gonna have to recognize that $300 as income. Okay, because he is better off because he doesn't have this debt anymore. Okay? There are certain instances where cash basis taxpayers will report income as though they were on an accrual basis. One of those instances is in the case of treasury bonds, EE treasury bonds, or I bonds. If you're familiar at all with these treasury bonds, they accrue interest on an annual basis, actually semi-annual basis. And you can choose to pay the tax on the interest income as you go, or you can choose to hold off until you cash in the bond. So you buy a bond, like let's say an I bond, you buy a bond for $500 and it accrues, you hold it for, 20 years, and it accrues another $500 worth of interest in that time. You could choose to pay the tax on that interest and claim it on your tax return every single year, and then when you redeem the bond and get your $1,000, you don't pay any tax on it because you've already paid the tax previously, but you weren't in constructive receipt of it, right? It was never actually paid to you, you're just claiming it, so you're using the accrual basis in that case. Or you can wait, and then you're gonna have to pay that $500 of interest, taxes on that interest all at once when you redeem that bond. So you have the choice between the two. So that's one instance where you can do that. Also, there's some special rules for farmers that can average their incomes, because farming is so all over the place, and dependent upon the weather and all that. They can use averaging. So that's another accrual basis. Questions about that? So, constructive receipt, income is available or in the control of the taxpayer, regardless of whether they choose to use it or not.